Hi guys, so I'll just continue so that we can all have access to this, okay? All right. So a series of lower lows, lower highs and lower lows, okay? Characteristics of what? A downtrend, and also the most appropriate place to mark out your downtrend is where? Is below it, below the troughs. Okay, like I said, we're going to go into the charts to have a look at that shortly. Okay, hold on. We're going to go into the charts to have a look at that. Wait, hold on. Why am I not? Okay, good. I can see my screen. All right, so then a sideways market, right, is what? A consolidating or a ranging market. Does not have a direction. And we have said that what? We should not engage in these kinds of trades. Okay, let me just quickly tell us how to connect on the WhatsApp. Okay, we should not engage in these kinds of trades. All right, so we should not engage in sideways markets. Doesn't make sense. Okay, then having a clear understanding about high time frames, okay? Having a clear understanding about higher time frames and knowing that the high time frame basically controls the lower time frame, okay? Knowing that the higher time frame controls the lower time frame. All right, so having said this, understanding market structure, let's now look at it on the charts to like have a clear understanding of what it truly means, and how we can learn with it. Okay, so let's look at let's look at this. This is DXY dollar index. Okay, so we're looking at the three types of market that we have, and if you can see clearly here on this, in this area here, what can we find? We can actually find a trend line, a trend. So we can get our trend line tool from here and then just connect it. Okay, so if we are connecting it, what can we see here? We have one touch starting from the bottom. Remember that we said that the most appropriate place to draw a trend, the most appropriate place to draw a trend, especially an uptrend, is from the bottom. Okay, so here we have one touch, here we have another, and we have another, but we have what? A break. Okay, so we remember that we also said that the trend, we also said that understanding market structure gives us an opportunity to what? Know the trend of the market. Understanding market structure gives us an opportunity to know, have an idea about the trend of the market, right? That was what we said. Now, if certain things happen, like you can see there's a break here, there's a very red candle that broke the trend line that we just drew. That means that what? There is a possible, and this is on a daily time frame. So it means that if price have taken this current low here, let's mark it with the body, there's a possible what? Change. There's a possible change of there's a break of structure, not just a change of character per se, but there's a break of what? Structure. So the trend helps us to trade accordingly to what is going on. Now, this is a daily time frame, and ideally, as a day trader, we're going to get to the part where we see different, where we understand different traders, and you can be able to pick which kind of trader that you are, because at the end of the day, you are the one that will determine the kind of trader you are, because we have different types of what? Traders. Please, if I mute you, try and mute yourself. Don't stay unmuted, please. All right, thanks. So basically, the uptrend is where you can have, once you have more than 3 touches, then you have a confirmed what? Uptrend. So we have 1 touch here. This is the dollar index for that matter. We have 1 touch here, we have another touch here, we have another touch here, and then we had a what? A break. So this is on a daily time frame. Now, as us, we that are traders that trade day on a day, on like an intraday trader, that's we trade inside the day. We trade inside the day. It means that we will now be trading with data that has to do with maybe the 4 hours to the 1 hour, or the in fact between the 4 hours and the 1 hour. Why? Because we are trading inside a daily candle. We're not trading a daily candle per se. Because even if we are trading a daily candle, what can we see here? Yesterday was very, very bullish, and you can see there was like a gap up, obviously. And if yesterday was bullish and there's a gap up, it means that price might just be going up. And if you read the information below here, you find out that price will filled this fair value gap, right? And there was also another block here, so we can say price might even be reacting from here. So it's possible that since price, now this, we're not trying to analyze this trade though, we're not trying to analyze this market though, we are just basically looking at what an uptrend is. So anytime you see 1, 2, 3, minimum 3 touches, you have yourself a nice uptrend. Okay, you can also find an uptrend in the smaller time frames. You can find a trend, not an uptrend. You can also find a trend. You can find a trend in any time frame. It depends on the time frame that you are trading on. It depends on the kind of trader you are and the kind of time frame you want to trade on. All right, so that's it for an uptrend. Now, remember that we said the appropriate place to market is below. Now, let's look at a downtrend, right? Let's look at a downtrend now. Let's see, do we have any? So we basically just looking at that. Okay, good. This is also a nice long uptrend. You can see what the dollar did. Nice long uptrend as well. So in this, the trend is your friend. In this kind of market, don't even dream of selling. So here we have a downtrend. You can see, and we said the most appropriate place to draw your trend line is where? Above it, especially if it's in a downtrend. Why? Because when you draw your trend line above it, for example, like this, okay, draw your trend line, we have, it shows you points of what? Resistance, right? We have the first touch here, we have another touch, 2 touch, we have the 3rd touch, we have the 4th touch where price was broke. So if you're noticing something, you notice that price usually breaks after the 3rd touch. It breaks, changes character. The same thing happened here too. After it touched 1, 2, 3, 4, it broke. Okay, so it's interesting to see how price usually breaks after a few touches. But now, the essence of drawing this is to show you areas of what? Support. Support is where price will always buy from. So if you notice that anytime price came close to this trend line, what happened? It bought. It came close to this trend line, what happened? It bought. Now, this is on a daily time frame. Let's look at that downtrend. It came close to this trend line. It dropped. Okay? It came again close to the trend line. It dropped. So anytime price comes close to the trend line, now you can have the trend line on any time frame. Any time frame. It all depends on what you are looking at trading at that time. You can even have it on the 1 hour time frame. Okay? You can have it on, if you look at this pair on the 1 hour time frame, what can you see? Okay, what can you see? On the 1 hour time frame. If you are looking at the touches, you'll find out that price has actually broken first touch, second touch. This is the touch that price has broken. If price closes below this, you know the funny thing, price took this high because initially this trend would have been like this, maybe something like this, something like this, where price is dropping, dropping, dropping. But what happened? Price took this high, this particular high, right? So, and as price took that high, it also what formed like a lower high. Remember that we said that what a downtrend is a series of what lower lows, lower lows, and what lower highs. This is a high, lower high, lower low, lower high, lower low, lower high, lower low. What happened here? Was this not the last low? So price has what taken it, forming a what a higher high. Now this is the last low, right? Currently, price has not taken this last low. Instead, it has formed another high, and this is on the dollar index. And remember that the dollar is the leader of the pack. Anywhere the dollar goes, all others are going to go there. So you may, and look at this is on the 1 hour. So basically, we are going to learn how to put it all together. It's just for you to know that the trend line is a powerful tool to actually use in forming a trade decision if you want. However, the trend line cannot be used alone. Okay, whenever you're forming a trade decision, you must have a minimum of 3 confluences minimum. You must have a minimum of 3 reasons why you feel like that trade should do what it is doing. You cannot just see a trend line and just say that you want to just immediately trade because of you are seeing one trend line that is supporting whatever on, especially if you're on the lower time frame like 15 minutes or 1 hour. The time frames that you should take seriously if you want to make a decision is 4 hours. And if you look at the 4 hours, what can you find? You find number one, that the 4 hours is just beginning. This is 3 hours, 18 minutes. That means that the 4 hours is just beginning. So this candle that is currently forming is is new. And the previous candle was an engulfing candle that engulfed one. This is 4 hours. So this is 4, 8, 12. This is what? 16, 17, 18, 19, 20, 24. So you realize that the last yesterday was bullish. So all of these data, they help you to what? Form a bias, form a terminology, form a reason why you're going to do what you will do on the chart. So the network is breaking again. Network is breaking again. Okay, so let's quickly look at a ranging market. Let's look at a ranging market before we quickly look at the Euro JPY trade. And, let's just talk about it. Okay, a ranging market. Let's look at a ranging market. Sorry, guys, my network is poor. I even hope you guys can hear me. Can you guys still hear me? Can everybody still hear me? Can anybody still hear me? Okay, great. All right, so let's quickly wrap up. Looking at a ranging market, right? Okay, can we see my screen? Can we all see my screen? Because I want to look for a ranging market now. Can we all see my screen? All right, great. So we can see it as it's moving like this. Looking for a ranging market. This one looks like it's ranging. No clear bias. A ranging market is basically a market that is just, it does not have any direction. can see. It's not in an uptrend, neither is it in a downtrend. Can you identify any trend here? What can you see? Price go, form what? Lower high. Form is when you form lower high, what is it meant to form? It's not lower low for us to know that it's in an up for us to know that it's in a downtrend. Instead, you form lower high, higher low, higher high, equal high, lower high. Lower. I mean, if you are caught trading in this kind of situation, you're going to be taking a lot of losses that you're just going to be asking yourself, what is going on? Why am I taking too many losses like that? Okay, so this is the kind of market that you should avoid. Now remember that this is on a daily time frame. This kind of thing, you can also find it on the 1 hour. There are some times that you can find that kind of thing on the 1 hour. Exactly. Look at this. Look at this. So imagine, okay, and if you notice, this kind of thing happened in this 12 a.m. down to 5 a.m. This is December period. So look at this. This kind of market is frustrating because it's not going up, it's not going down, it's not. You should not be trading this. If you want to take a trade, it should either be on the uptrend or on the downtrend. And if you happen to catch a trade in the beginning of the move, just like what is happening here now, it's going to be a nice buy. Yeah, it's going to be a nice buy. Let's see how it goes. If you're lucky to catch a trade in the beginning of the trend, or even if you don't catch a trade in the beginning of the trend, nobody is going to beat you up. You can easily just catch it as long as it is in line with the trend. Anywhere you enter, as long as it is in line with the trend, you are what? Good to go. All right. So, guys, this is basically us understanding what an uptrend and a downtrend is. Let me share the screen very well so you can see. Okay. So you definitely should have taken notes, although I'll still drop the recorded session on the group so that you can read and assimilate. This is fine. Okay. And then remember that we talked about we are now going to be having we have a syllabus, we have a curriculum that we follow, and we just treated the first topic on the advanced because today is for advanced trading classes. So we just treated the market structure, the trends. Okay, let's quickly see how we can mark highs and lows. Basically, highs and lows are talking about high time frame, former highs, current highs. All those things are important and significant on the chart. Okay, when you mark out the former weekly high, former monthly high, former weekly low, former weekly high, all these things are important because price will always react from price will react from a former high slash low level, especially if it's on a high time frame. Okay, and the high time frame starts from 4 hours, okay, down to 1 month. Even it can get up to like 1 quarter, literally. But the high time frame starts from when? From the 4 hours. The 4 hours will give you direction. Then you can take your entry from the 5 minutes or the 15 minutes time frame. So the 4 hours will give you direction. Then you can take your entry from the 5 minutes, or 15 minutes time frame, depending where you see your trade. Okay, you can do that. Now, where people get confused when it gets to understanding what is happening on the 4 hours and how to now break it down to understanding how to engage on the 5 minutes and 15 minutes. A lot of people get confused, but let's quickly look at that as we wrap up. Let's quickly look at that as we wrap up. So now that if we look at this DXY now, on the 4 hours, what does it look like? What does it look like on the 4 hours? You should always judge from what has happened recently. What has happened recently? You should always judge from what has happened recently. And what has happened recently, that price has been bullish. Price gave a gap up, clearing this high. It has been what? Bullish. And currently, price came back into this block that it formed. You can see this red candle is something like another block and it's on a high time frame. Price came back into the block and it wants to push up. Now that you understand, okay, you can also look at it on the daily to also see, because some people, if you are new, you might not really understand what this gap up or gap down thing is, but just take it like that, because the more you keep practicing, the more you keep showing up, the more you keep learning, the more you keep knowing. So on the daily, first of all, you can see the candlestick formation. Yesterday, bullish, gap up. The last candle it did not have a body. The last candle did not have a body. That means that the buyers or the sellers were not visible. Then the next day, what happened? We now saw that the buyers had already taken over. This is the simple logic on how to understand price. The buyers are already taking over, giving us a very strong bullish candle. An inside bar for that matter. Okay? So inside bar indicates that what does the name mean? Inside bar. When something is inside, when a lady has an inside bar, what does it mean? Maybe she might be pregnant. So she will definitely give birth. And she's gonna give birth to what? Long, healthy what? Bullish candles. That's the next thing. You just see one long candle. I will just take this high here. You just see one long candle that will take this high to just cover everywhere. Okay? And the people that we are buying will make a lot of money. And they understand this thing based on the logic of price. So now that you have understood that price is most likely reaching, okay, now fantastic. Remember that we said the high time frame controls the low time frame. Look at the weekly now. On the weekly, you can see that there's a fair value gap. Price must respect, as long as that fair value gap is on a high time frame, price will respect it. It's an imbalance. That's what it is. Price must refill that imbalance either with 50%. Most times it will just get to it will get to this or this block, this last one. It will get to anywhere inside of it. It might be anywhere inside of it and then it will drop. Price must respect the high time frame. So if the weekly is reaching for this high, that means that we are right when we say that on the daily we are going up and on the 4 hours we are going up. So we are going high. Okay? Now it's very important to understand this logic. It's one thing to understand the logic, it's another thing to know how to engage. Now, coming down to the 1 hour time frame, for example, we can also try to make sense out of what is happening. Most times when you see a voluminous candle like this, price will most likely keep going that way, which you can see on the last candle. Price did not just give us a tweezer bottom, but it gave us a very strong bullish candle as well that engulfed the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Can you see what I'm counting? This thing is significant. It is significant. When price do anything, people will just be looking at this thing, it's just red and green. But all this red and green action have a meaning. The day you start reading meaning into the red and green candle, the day you start understanding the stuff, and possibly you might even make money from it. So that's just basically it. So now looking at this on the 1 hour, it makes sense. So remember that we say we can engage on the 15 minutes. So on the 15 minutes, when you go down, you find out that you had that ranging shift that usually happens that we say we should what? We should avoid. But it was ranging, then it broke. Okay? It broke, cleared these lows, all these lows here. It broke, cleared these lows. Then it broke again. Can you see that it broke to clear this high? It broke, cleared this high. Okay? So now that we have a sweep and a break, we most likely might now have a price might have made a decision as to where it wants to go. So once price just gives us our last confirmation will be that price should close above this high here, 107986. Once price closes above 107986, which is already doing, there's nothing that will stop this dollar from buying. Nothing. It will buy and buy and buy. Okay, and all other pairs that are opposite it, like for example the euro, the GBP USD, will sell and sell. You can already see it's selling already. If we look at it from that weekly, look at it from the weekly. What happened on the weekly? We have a what? An imbalance that is going to reprice. The same thing on the dollar. Then on the daily, you can see that we had an engulfing candle yesterday that covered the whole day. Okay, and you can see that we have another block here where price might most likely get to, because on the daily price must respect the high time frame confluences. Must. Okay, must. Then look at it on the 4 hours, which is where it gives us direction. You can clearly see all these things. That what? The 4 hours is remaining only 1 hour to complete, and it has already engulfed all the candles. First of all, it broke structure. 4 hours break of structure should be taken very seriously. It broke structure here. Okay, then it did what? It retested it and it is dumping. It will dump. All I can see dumping to is to take this liquidity, because what I see here is a bunch of liquidity. These things are liquidity. Me, I don't trade trend line liquidity. I trade support and resistance liquidity. But if you draw something here, I don't trade trend line liquidity because it's just elementary. It's for elementary traders, and I don't consider myself an elementary trader at all. So basically, what I have most confidence in is in the candlestick formation according to market structure. And if you notice on 4 hours, this is what? This is a high, this is a low. This is a what? Lower high. We should most likely be going down, down, down. We should be selling to hell to take this low. Why? Because this market structure will show you the direction. This is a downtrend. You can see 4 hours will show you the direction. But the most important thing is the psychology. Do you have what it takes to actually sit on your hands, take the trade, and allow it to hit, take profit? That's another story for another day. All right, so guys, I believe that we've been able to share much value on this call. I hope that this session was being recorded so that we can have it. If it was not recorded, I wouldn't. Okay, yes, it's been recorded. So I'm wishing us good luck, good trading. 2025. What I'm noticing about this year is that nobody actually has the time to motivate anybody, because every serious person is serious about working on their goals, working on their self, making themselves better. Is as in this year is such a selfish year that everybody is just minding their business. And I mean, you also should take care of yourself and do the things that are necessary for your own growth and success. All right, so that'll be all from me, guys. Thank you all so much for connecting. You'll see the recorded session. See you same time on Friday. Let's get it and let's make it work. All right, thank you so much. Bye for now. Okay, well, let me just throw you. If you have a question, like, just send it to my WhatsApp. Just send it to my DM. If you have a question, just send it to my DM. Let's take it from there. All right, thank you so much.